Hi everyone. This is Sameer Singh Jaini here from the Digital Fifth. Today, today's webinar, we'll focus on the new circular which has come from RBI, which is focused on core financial services solution, which RBI expects the NBFC to implement. The thought process is what it is, right? We know core banking all the time, but we will not know what core financial services solution would look like. What are the benefits, why it is coming, what are the benefits, and all of that we'll focus on. So the way we've segregated the session is to first 20 minutes, I'll take a session on what the document is all about and what are the benefits at a high level as what we think. And then we'll reach out to our experts here. Umashankar sir, he has a great experience on the background and also has been with RBI for a long time and senior leadership side. We will have Neeraj sir here, who heads Signet Infotech, one of the leading platform for banking and lending businesses, and of course Shashank, my co-founder here. So we'll come into the next second half where Shashank will lead that discussion, and we'll take it from there. So with this, we quickly start. We'll keep focused on the target so that we, in 60 minutes, you will have a good grip on what's happening in the market, and we'll go forward with it. A quick introduction on who we are. Many of you would have joined our earlier sessions. We basically work on primarily on the consulting side on fintech. So we work with many banks and NBFCs and others to build their digital strategy, fintech strategy, and all. We will talk about it. We do a lot of partnership in the markets. It can be business partnership, investments, anything but fintech and digital finance is what it focuses. And we do tons of training as well. In fact, our third cohort of a 4-month program is just starting a day after tomorrow. So most of the team members are actually focusing and building for it. So trainings are big. We do corporate trainings as well. And we may be the largest trainers in Asia for this segment. And of course, we do hiring as well in the segment. These are some of our customers across businesses, across banks and NBFCs and fintechs and everybody else in the market. So that's a quick one on us. Maybe one of the reasons why we're doing it is a lot of customers are reaching out to us, saying what is happening in the market and can you help us in building the next roadmap for doing this. So that framework, we thought while we are talking to our customers, we'll also give a generic feedback on how it's going to work. So just a quick view on advisory services. We work a lot on the pure advisory on maybe maturity metrics on digital side, strategies. We are building strategies for multiple entities in the market, how the products and journeys are built. Then we do a lot of work around open banking and neo banking strategies, process plans. We do tons of work on startup strategies, saying that from idea stage to stage Series A, Series B, as entities transition, we work with them. And security and compliance is another segment where Shashank leads as practice as well, very, very strong on that side. And we've started doing a lot of reports as well. In fact, many of you may be able to go to our research reports, which are available online on our website, thedigitalfifth.com. And it's free of cost. All our reports are free of cost, available to anyone and everyone. So we just came back with our new report around 2-3 weeks back, again, very deep, which has an analysis of the market, research, trend, and also funding analysis, acquisition analysis, deep analysis of Middle East and Southeast Asia. You can pick up and start reading it. A lot of people will be charging a lot of money for it, but that's not our business model. Research is a public, I think it's for public consumption. We build it, and that's what you can pick it up right away on the website. So let's come back to the segment itself and talk about what's happening, what it is all about. Now, if you realize around October this period, last year, RBI came back with this framework saying that we will create multiple layers. And of course, they were actually discussing about it earlier as well. But purely from a circular perspective, the scale-based classification happened only in October. And what they have said is that there'll be 4 layers: top layer, upper layer, middle layer, and base layer. Very, very intuitive. As of now, there's nobody on the top layer. So top layer is empty, and maybe they will classify some of these entities to go up based on risk issues and also the size, right? You may have, that some of the largest of NBFCs have been bigger than banks. So, and there's a lot of risk which has happened in last 3-4 years because of ILFs and others. So I think they're very conscious about it. And then the kind of supervision which banks go through, NBFCs have not been. So one of the thought process clearly is they will have for these new category, which is upper layer, for sure they will have bank-like regulations. So how many of them? I think 10 for sure. There would be more as they evaluate the framework, maybe 50 odd entities there. And also the middle layer is basically anybody who is like 1,000 crores and above, systemically important and all of that. So that will come in middle layer. If you are a P2P lending company, an account aggregator, you will remain in base layer for long. So I think those segregations are clearly documented. My suggestion is that many of us leave it to our compliance team to read the documents. Please, these are readable documents, English only, and there's no logic required. You can read it, and RBI is doing a fabulous job of making readable. I think we always thought that only compliance guys can read it. Please read; it works very well. So, quick one. As I spoke about, top tier is actually completely empty right now, and they will be adding more, adding as and when required. We should see it as we go forward. Upper tier is what systemically important, which means that they should have 1,000 crores and above. And of course, actually, when you look at the assessment, really much above, because middle tier is where actually they are looking at more 1,000 crores and above, and below 1,000 crores is what they're. So in base layer, the supervision will be limited, but an upper layer will be bank-like. I think middle tier will be somewhere in between, slightly easier, but still not easy. And again, what we do believe is that over a period of time, we have seen in the bank side also, RBI came back with Gopal Krishna committee report way back for banks, I think around 2011. And subsequently, if you look at the same report is getting made applicable to NBFCs and then HFCs. So everybody is going to the same framework. So RBI is going to apply the same norms to every entity as we go forward. And that's what our view is. Now, to ensure that this happens, I'm not going to go on what is yeah. So on a very absolute level, I'm not going to take into what exactly is given in the regulation on an overall basis, because focus is primarily to ensure that we look at core financial services implementation, how it is done and why it is relevant. So they have also classified that within the middle tier and upper tier, if you have 10 or more fixed point service delivery units, which means that you can assume their branches as of October 2022, you will have to do this. And this is very similar to core banking, which has happened. Now, you have to also realize that it is potentially possible that RBI, when it gives license for core banking, may also prefer these. It's again conjecture view, but I think that's logically so. RBI, when it audits, and I have been part of banks for a very long time. When RBI comes for audit, they go to the extent that they actually know which core banking has what flaw, and they will ask questions around that exactly on pinpointing that, right? So I think it's important that RBI is also looking at 70 of the systems. Otherwise, when they go for audit, everybody will be saying I have 5 systems. Below this is Excel, and God knows what is coming out. And then when they ask for a report, they will say, I will collect something, bring it together and do it. Whereas in banking world, I think mota, you have seen a great standardization. Some of these things, since I was working as a CTO as well, I know it was not that difficult for us. But just imagine the pain RBI must be going through when they go through audit and they realize that they're getting data which is not maybe auditable. They would like to log into a system. They know many of these large core banking platforms, but they may not know how hundreds and hundreds are working. So they may be looking for standardization. When it is adopted, we need to figure out how exactly it will come up, because it's not going to be easy. The NBFCs may find it difficult to actually aggregate all together. So there has to be a layer creation. But what it will also do is RBI is also looking at can the banks ensure, NBFCs assure that they have a seamless integration from a digital perspective. So what we have seen is many of the let's say if you see a Bajaj and others, they are leading and they have been able to provide digital interfaces to customers. That's where the forte is. But many NBFCs are still stuck in old world systems which do not have front end, do not have LOS, everything is run on Excel and maybe something like that. So even if they are having large size, right, even then they follow for a lot of these segments. So I think one of the points they're clearly coming back is that they have to do digital offerings. They are looking at somewhere of anytime, anywhere servicing. So as we look at it, the market is also changing. God knows where BNPL is going to lie, right? When BNPL is going to lie on the real time on the lending side, these guys also will have to work on it. Of course, BNPL is still under discussion on the RBI side. We need to have integrated facility inside out. We'll talk about the architecture on that. Centralized database and accounting, I think, which is very well done in most banks and larger entities. I think that's what the expectation is. And then they're clearly calling that we need to have suitable IMIs both for internal and regulatory reporting is required on a regular basis. Now, coming back to the framework and timelines, I think what they are asking is that any of these entities which are falling in this place will have to do a full compliance by September 2025, which is technically many of the guys will say at 3 saal mein it's a lot of time, but the number of times when banks and NBFC have asked for extension, it's not funny, right? Every now and then we say it is not technically possible. 3.5 years is a fairly long time RBI has given. They also said that given that there are some larger entities as well, they're expecting 70% of the branches in this platform before September 2024, right? So which means that you have now 2.5 years if you are large. Now, if you can cover 70, you might as well cover 100, right? You won't really want to take a pain of not doing it. So technically, I would say anybody who's in upper layer will have to take care of it in next 2.5 years. And interestingly, they've also said that they know that the banks or NBFCs will delay it, and they're clearly called out that they will start asking for a quarterly report as well. So operationally, they are saying that don't tell me that nothing's going to happen, or they will show you some black box, and then so I'm sure this will get really deeply audited. Now, in terms of why now, I think clearly there has been some places where digitization has not happened. The top 10 or 15 or 20 players have taken a different view, and rest of them are still stuck. Banks had a better view because they always were digital by nature. They had to do ATMs, they had to do POS, they had to do all of that earlier. But NBFC did not have it. So most NBFCs do not have a front end even for the customers to look at it. They're still branch focused. So I think digitization will be slow. Maybe RBI is looking at that. NBFC also have been growing, so maybe it demands right now you need to be robust and you need to be real time. I mean, many of them are as RBI is planning or has opened the factoring business to NBFCs, and also as we saw that it will come up even on credit card side. Now, if these guys do not have a great platform, how will it work, right? They need, and again, it's a DNA issue. Once you go digital, your DNA changes, right? So I think maybe it's provocation saying that please start focusing on it. When you have this, maybe we'll give you a license as well for credit card as well. So it may be linked to the DNA of the company. Better supervision, as I said, that it's difficult to get reports which are haywire, and we don't know which system operates how. Better data management, maybe once you do all of that, many of these NBFCs are not able to partner with the ecosystem at all. Maybe as we look at it in India, NBFCs, other than if you talk about top 10, you can't do fintech partnerships. So when we reach out to partnership to fintechs, to NBFCs, we actually go to only 8 or 9 entities. We don't go beyond to 8 or 9 because there's no business out there. They don't understand what these APIs are. So that's a change which is partnership ecosystem will happen. You will also be able to use external data much better. I mean, PCR and as well as account aggregators are coming. That's what we are looking at. So what is the process? I think from an NBFC perspective, I think they will get much better organized. From a finance perspective, monitoring perspective, everything will dramatically improve over a period of time. Operations will improve. Some of the optimization which has not happened till now, that will come up. Customer base can be widened because once you have platform available, which is digitally savvy, you might want to cross-sell and all of that. So I think readiness will increase on the number of services you can offer. And maybe some time you can even extend to credit card if that is what is required. Capacity building to contribute. So basically today, even if account aggregator comes up, many of these entities will not be able to pull this data, because where will it put it, right? Because once you pull data, you need to insert somewhere for your judgment and maybe early warning system. If they don't have this technology and frameworks, they will not be able to do that. So I think a bit of a contribution from a pulling perspective required. Of course, account aggregator, they can't equip data, but they can actually pull. Similarly, when PCR comes in from RBI side, that has to be pulled as well. So I think that frameworks will be useful. Better compliance, better reporting on both internal and external side, and opportunity to collaborate. Of course, cons is clearly not really cons, but realistically, capex will increase for some time because you need to relook at your platforms and look at that what you need to replace with, how you need to get replaced with. There'll be skill gaps. I mean, I remember once I went to NBFC, which is not very large, and we had to go through the KYC process, and it was done offline. And when I asked the customer, what is KYC? And the answer was bizarre, right? I really will not name what was the answer, but it was bizarre. It was nothing but other than KYC, something other than KYC. we need to be conscious, right? So let's move on. In terms of complexity and skill gaps, I think this is where some people have to really work hard on that. Otherwise, we'll build something which is not going to work at all. Benefits to customer, I think the way today in the market, the customer also know they choose their banks. I have chosen my bank because the bank is digitally savvy and APIs are available. We have also opened that journeys. So I think these entities will have a better access. The customer will have better access. Their services will also get similar to to that of a bank now. When I say so, I am very clear. Let's say lenders. Earlier we used to have a personal loan journey. You give a loan and forget, right? And then wait for money to either come or you say it becomes NPA. But in the new framework, everybody is looking at a credit line and utilization of credit line. And it is from a BNPL to credit line to anytime loan, a loan against X and Y, everything is coming on a real-time basis. So I think NBFC have to be similar to banks to ensure that they process real-time. They will also have I'm sure their CFO will have better time now because they have access to better systems, better controls, better processes as such. In terms of mobility solutions and all, I think that will also be available. Now, good news is that as they digitize, I think data pool and whatever information is available will be much better from a credit reporting perspective. Today, many of them do not report on, right? They tend to report once in a month because they actually have to do it manually, process and all of that. That is an issue. NPA management is an issue. So NPA, once it becomes NPA, how do you ensure that reporting happens on time when the systems are offline? It doesn't work on time. So I think this is useful. They'll be able to use PCR, akin, or whatever frameworks which will market will approve. I mean, if you realize the NBFCs have been opened for even for KYC usage, but you don't see too many NBFCs using it, right? Because for using, you need to have backend frameworks to align to it. We also believe that co-lending frameworks will dramatically improve because as you go digital, you may start securitization your platform, or you may securitize your portfolios better, more, or you may want to do into gold lending, which RBI is promoting for. If you have good core platforms which are ready to integrate and you know how to have a play with, I think co-lending partnership will grow a lot. Right now, it's linked to very few who are digitally savvy, and I'm not talking from offline. Actually, this is experience whatever we have seen in the market. Across all strata, there will be more partnerships, better visibility, maybe less failures of NBFCs. I just hope so. I think the kind of challenges we saw in some couple of NBFCs, if RBI could control that upfront before the failure happens, I think that will be a huge advantage. And sitting on the fintech side, I know that fintech ecosystem wobbled a lot because of one failure there in 2018. It just sucked the blood out, the money out of liquidity in the market. So it's critical. And of course, lending as service as a platform will dramatically evolve because till now in India, one of the aspects which every platform guys will say that while banks give money, NBFCs are not willing to give money, right, for these platforms. They don't think that it's critical. I think this will also increase the usage of right platforms in the country. Opportunities for solution provider, I think we believe that 400 to 500 entities will fall in this category. I may not be accurate. We've not done very deep analysis, but that's the number which we are looking at. This will also, even those who are smaller than this and who are going to get into this, let's say 1,000 crores bracket, they will start readying for it. So the actual market will dramatically go. Many of these platforms are right now looking at opportunity outside India. I think it's time for them to look at India as well. In terms of offerings will dramatically improve. So they need to actually start working on it. Maybe they have to link it to the current change as well on the credit card side and factoring side. So they need to look at more products to be offered to the market. And as I said, anybody who's into co-lending business or securitization business, they will improve on the technology side. And maybe the backends will get improved, and then front ends actually can be built much better. Ends are an issue because backends don't exist. And maybe there'll be new products coming. Today, the innovation which is happening on the fintech domain will soon start touching NBFCs as well. Maybe they will start offering those products as well. Given that, I know that few NBFC are really working on right now on their strategy. They're not able to build maybe on day one on the API side or AML side, and they suffer a lot, right? So those kind of inputs are now getting helping. When the market looks at RBI is also looking at them to go there, they're sort of reacting differently. Maybe from a pure quick architecture perspective, when I say core financial services, I'm actually saying a mix of many of these. It's not that I'm saying RBI has defined. Even core banking solution, you can think of multiple facets of it. But when you look at overall, it's like, I would say, a good repository of a scalable platform which can be on cloud, has APIs. If you were to define, I would define like that: integrable, auditable. It should not be happening if I mean, for example, in some core banking, if you make one change in the database, it'll stop working. They'll not allow anything to be changed, right? So that's kind of strength, saying that nobody can mess with the data. Everything is auditable, traceable, API oriented, partnership oriented. I think that's how I would define it. And if you look at this whole framework of LMS, and maybe in some cases they might just include LOS as well, but technically I don't think so. But as some bit of a full control engine, right? On what basis? RBI has also come back in another paper few weeks back on digital lending, where they've said clearly that they will not expect that it's AIML led. They want to see explainable AIML, right? So that will also sort of form the part of it. They will also want to understand the collection. So I will say a mix of it will be a core financial services. I won't say only one system will be called like that. Even in a bank, if you go core banking, there are more than one system, but they're looking at more stable and scalable system rather than, so the much better definition will get created and the market will define it. Of course, from a regulatory perspective, they won't want to know AML. They would, whatever, they will also want to know frauds. They want to understand what kind of audits are happening, what kind of processes are happening. And of course, they would also look at, and I'm sure they will put today, if you look at RBI today tracks the mobile payments and debit card payments which are happening online, right? That structure is there. But there's no tracking right now at all on NBFC side. Right now, the unke paas nahi hoga. Now that will also change, I'm sure, very soon. Even those frameworks will get changed. These platforms are providing for onboarding journeys and what are the new onboarding happening or what transactions happening on their mobile channels, cross-sell, upsell, right? And therefore, there's an opportunity for somebody to build great mobile app, great RM app, portal, and all of that. Of course, this framework where you are interfacing with third-party system. There's also a potential play of API management platform out there if there's a intense interaction with outside world. And of course, critical point for next steps, you need to pick the right platform. So I think in 2.5 years, what we should not do is 1.5 years we take decision on what to do. Then another 9 months to figure out which partner, and then we say 3 months go live, right? And nothing happens, right? This bizarre questions is what we need to avoid. So we need to pick up the platforms right away, embed into our existing stack. So you don't need to remove your current stack. Maybe it can be pulled in together. So we need to find answers, get your process, get your skills, get your program, and of course, try to run program. It is possible. If you go digital and scale, you might actually save tons of money. You will find opportunities to automation. You will find opportunities where maybe duplication of work was happening. All of that will also come in. Just one second. And of course, as you do this, you need to ensure that your core infrastructure is taken care of really well, because that's also critical. If you are on-prem, maybe you have to go to cloud right away because it's time to ensure that you're scalable like that. You may also have monetization opportunity coming up because your stack is scalable and you can partner more and more. And you need to look at this as an opportunity to build real use cases rather than saying RBI ने बोला है implement कर दो, don't bother about what it is. And वो उसमें से अगर धंधा करना होगा तो मुश्किल है, right? You really should not waste some time. RBI has done, so it's RBI mandate. Let's not focus on value or addition. I think we have 2.5 years to go. We must create value for business with that. Can we compete with banks and larger fintechs and NBFCs in this segment? And where we can help, I think we have been working closely with the market, and that's our strength. We work a lot with banks and fintechs on the same area and NBFC as well. So we can help you in evaluation of the platforms. We can look at your models, revenue models, business models, and figure out if you can create a digital strategy around that in embedding the platform as well. We can help you in partnership in the market around co-lending, fintech, whatever it is. We can also help you in monetization frameworks, processes. I mean, maybe many NBFCs should ideally work with on issuing a prepaid card for lending and all of that, because it's technically possible and there's an extra money you can get out of that, and you can also control the usage. You can also help in governance, risk and compliance advisory, and program management. With this, I'll stop now. and we'll quickly move towards our leaders here who are here to guide us on their review from RBI perspective, platform perspective. And Shashank will obviously, since he sees this ecosystem a lot closely in his implementation, will talk about it. I'm sure many of you will have a lot of questions. Please do share the questions with the host, and we'll respond back to them as well, right, as we go forward. So with this, and Shashank, please, you can pick up those questions as they go through. Yeah. So with this, you don't need to look at my face at all. I'm just getting off. Thank you, and over to you, Shashank.
Yeah. Hello, everyone. So I'm Shashank Shekhar. I take care of the consulting here, and been with the bank for 8 years and driving the digital banking, the technology infrastructure, and also work with tech companies like Wipro and L&D Infotech, more into technology services. But before that, I welcome our guest, Umashankar Paliwal, sir. Hello, sir. And he's been former executive director, wide range of experience in the banking sector. He understands that regulatory framework very closely. Right now, also he's running in a self-regulatory organization called Currency Cycle Association, and also he has been director of supervision, where we were talking about the compliance with Bank of Mauritius. And we welcome our another guest, Neeraj sir. Hello, sir. So he is the founder and managing director of Signet Infotech, again coming with a strong 20 plus years experience in the technology and the banking segment. And Signet is primarily driving lots of the technology solution in the functional and the compliance space. So with these two gentlemen, I'll just put some questions, and we'll start with Umar sir, because you have been very closely watching this entire the regulatory framework, being there at the regulator end also. So just want to pick up your thoughts that how do you see RBI is coming with this regulation and how it's going to help the ecosystem, not only specific to the NBFC, but as an ecosystem at large. What is your perspective from where that RBI is coming and what they're trying to drive with that?
Thank you, Shashank, and a very good afternoon and welcome to all my participant friends. See, when we look at the reason that why RBI or any regulator, and more so in this case, we are looking at RBI, should be looking at the introduction of what we feel like, say, a core banking solution for the NBFCs. There is an arbitrage which is available in case you have less of the regulation or a light touch regulation vis-a-vis a core regulation which is touching, which people might say a hard touch, because the other one is called soft, so I'm using the word hard for that. Actually, regulation is regulation. The only thing is that at times we might be looking at that, okay, we give time for a particular sector, which has happened in the case of the NBFCs. And now it is the time that maybe historically also when we talked about one or two debacles happening in the last 3-4 years, that could also be not the trigger, but could be also a contributing factor towards having more of the equal regulation available, so that some of the NBFCs, which are certainly large in number, the classification which is given based on the layers and all has been very widely and known. So I would request again, as Samir said, that please go through them. It's maybe a 45 minutes read. Understanding may take slightly longer, but the advantage which we will have is that RBI, we will have to read what the regulator is looking at. The regulator wants a playing field which should be equal, which should be a level playing field. Each one could be operating, each sector, like say, let's take the NBFCs, could be the cost which they are lending would be different from the cost at which the banks are going to lend. The cost of operations for a universal bank could be different from that of a small finance bank or a local area bank. NBFCs could have their own cost structure. And when we look at the NBFCs who are the MFIs, also there could be a third layer of the NBFC infrastructure as well as the costing. Now to bring all of them together, and then we should not say that there is an arbitrage available, they are light regulated, they are have the wherewithal to go through, and then tomorrow something goes wrong. There is a lot of public outcry that ultimately the RBI did license them. So the responsibility lies on the RBI to ensure that whether it's a deposit taking, whether it is as a lending institution or it is also from the customer grievance redressal mechanism that we are able to address the scenario. So this is one part. Second is the importance of the NBFCs as it is rising. As very rightly all of us know, some of the NBFCs are as big, if not bigger, and some of them are certainly bigger than that of some of the banks as well, which are operating in the ecosystem. Having said so, if you have, as Samir very rightly said, that at the bottom lies an mechanism to pull out the reports, which could be as rudimentary as Excel. And on the top of it, we try to bring up a layer which could be a facade and not be the actual one where we say that, no, sir, our things are coming out of the computer. Now, gone are the days when that type of a system could work and we could be hoodwinking the regulator. And now, 3 or 4 more things which I would like to bring out, and then I think we can get the next questions as well. One is designing a supervisory reporting system, which RBI has already started for the NBFCs by the name of Utkarsh. Second is also central fraud registry, which is already underway. Now, doesn't look like to us, but at least the major frauds will get reported, will get embedded in the systems. They will be the red flags. So that is a second area in which the regulator is looking, especially for the NBFCs. Thirdly is the strengthening of the MI and the supervisory is assessment based on the off-site one. On-site would be there, but certainly people will say, you are not visited us. The regulator has not visited, so everything is fine. No, that's the basic purpose. Going forward, when we are looking at, say, 3.5 years from now, I think we have to start upfront. In addition to the core financial services solution, I would also say, please also look at the net own worth criteria, which RBI has also brought out a glide path going up to, say, 2027. In these 2 factors, or also the parameters, those of us who are really serious, and I am very sure whether it is the fintech, whether it is the NBFCs, are participants, or those also who would be getting access to whatever we are discussing. The earlier we start, we have an early mover advantage. Number 1, for the customer. Number 2, for the system. Number 3, and the most important, for the regulator. See, if we say that by 2024 September, we have to be there with 70% of us, that's a regulatory requirement. You see, the regulator is not happy. It is not unhappy, but it is not very happy. Now, imagine something that if some of us could be there in, say, September 23. And when we give our glide path and also the board accrued policies for the reporting, which will start from 31st of March of 2023, which is just a year away from now. And we say, say that instead of a cost and time overrun, cost it anyway, we will have to take care of. But instead of a time overrun, we are able to say that we have achieved it much earlier than that. And basis being a regulator for almost 3.5 decades, both in India and Mauritius, I can tell you, nothing pleases the regulator more when you are able to achieve it prior to that. It is like a child in the family. You say that, okay, you have to get a first division and the child lands up with a distinction. It's exactly the same way. And then the liberation which comes from the regulator in terms of at times, because the times could be hard at times there could be a smooth sailing. So when, God forbid, for whatever reason, could be a geopolitical as we are witnessing, could be COVID as a pandemic, or could be anything which is unforeseen as of now. If something happens either for the sector and more so for an entity which has been able to do it much earlier, we are on a much, much better platform, number 1. Number 2, the one-to-one relationship helps. Number 3 is that, sir, you gave us an X time, we have done it. So right now, in case there is a difficulty, it's a, for lack of a better word, I'll say that it's a bail which can help us out. It's a parachute which is available in case of a difficulty, in case on our flight path we encounter some difficulties. I stop it at that.
Absolutely great, sir. Yes, I'll just come back to you. Probably since you have been involved into the deployment of lots of core financial services solutions with lots of the NBFCs, what do you feel that what should be the approach for the NBFC, or what they should be doing post this regulations coming into the now in the purview? for the implementation. So what there should be their approach? You're on mute, Neil.
Sorry, Shashank. I would just say first thing is that in India, things don't move unless and until it's a compliance compulsion. So that is the first point I would like to say. Second thing, I have been interacting with many NBFCs, and I'm surprised at the sheer lack of systems that they have at that place, either for the compliance reporting or for basic accounting reporting or something onto that side. So LMS, LOS and LMS also of the right kind are a distant thing. So NBFCs have a long way to travel into this particular area. And now with the regulatory guidelines clearly out, it's a compulsion for them. They need to start. So instead of trying to say that, no, we will not take a decision today, we'll take it sometimes later, or a bit of time here till 2024 or whatever it is, would not be the right approach. They should start moving towards it, start implementing something, start identifying what they want to implement, and they should look at it, how it's going to scale up for not the immediate future, but for a long term. So they should kind of be with a provider who would be able to sustain that particular solution for a long period of time, who at least takes care of all their primary requirements into the system, and maybe also the futuristic requirements are also taken care of it. And once that is kind of taken care of it, it should be cost-effective solution as well. So after taking care of all this analysis, they should kind of select the right provider and start implementing. As Paliwal sir said very clearly, there's no point in waiting for a long time for initiating this implementation. The sooner they start, the better it is. And I can give a very clear kind of a simile to what this is there. So when GST was being implemented, or when e-invoicing was being implemented into the government, there was a kind of many of the corporates were into the impression that the deadline will get postponed or it will get delayed, which did not happen. And when the things came onto the surface, it was very challenging for them to implement it. So taking from that example, my request, pleading, and a suggestion to NBFCs would be start soon, start the right way, and kind of start implementing. So you are much ahead. And as Paliwal sir said, that the regulators actually would be very happy if you have implemented it earlier, because that's kind of less load onto the regulator as well when the actual compliance comes. The other part that I wanted to share was today, either the GSTN side or the income tax side of it, and maybe someday RBI also will get access to the same data. The regulators have a lot of information about your business even today. And the integration of the systems or connectivity of the systems is happening in a big way at the government end. So any which way they are going to get a lot of this information, and the fraud detection, round tripping of transactions, all of these things will be called out very quickly. And this is going to put you into a difficult situation, because you will not be able to comply and provide the right kind of information to the regulator as and when it is required if you do not have the right kind of systems in place. So I feel personally it's very important to have the right kind of systems in place so that you do not have a regulatory challenge in terms of your compliance. So that's kind of first response from my side. Over to you, Shashank.
Thank you, Neeraj. Thank you. Guys, please raise your hand. But while the discussions continues, please raise your hand if you have any questions, so that at least we can pick it up your questions for Uma or Neeraj sir. Okay. Meanwhile, the question comes from the participant. Uma sir, again, I'll come back to you. You spoke about the three very critical components from the supervisory perspective about that building, designing the supervisory framework or the assessment, or also on the central fraud management part of it. Now, one thing is very sure that solutions help you to put that structure in place, but more than this, the solution, you also need to take care of how your procedural frameworks, organization structure evolves. So what's your point that how they should be driving the environment around that solution so that at least all the aspects are well covered?
Question is to me or to Paliwal sir?
Paliwal sir. Paliwal sir. Yeah. You are on mute, sir. You are on mute. Amiral
Yeah,
guys,
sorry.
please, raise your hand so that I'll come back to you and we'll pick up the question.
Yeah, thanks, Shashank. So here I'll put it this way. The first and foremost is that the regulator is trying to bring the NBFCs within their fold through the reporting mechanism, which is a core financial services solution. Already there is an off-site thing which is happening. There is also an on-site supervision which is happening. There is also purely democratic process which is underway for the last at least 15 to 20 years at RBI. Prior to that, it used to be that RBI would issue the guidelines, and then it was that since you are a licensee or you are a regulated entity, you have to do it. Now, if you look at even the way this core financial services solution has come out, it has been more than a year, because then first initially the intent of it was made clear. Then the basic part was put up for in the public domain for the suggestions and all. And then subsequently the issues have been, like say, now formulated and the guidelines have come. Now, why is it happening? I'm again coming to the same thing. Why? The importance is that in addition to what the regulator is asking us to do, they are also giving us through the sandbox an opportunity that, okay, if it's a fintech company, if it's an NBFC, through the various cohorts which are being available, through the various, the second, third, fourth rounds, which will happen and will continue to happen, that if there is something which you feel can bring about something good to the system and which you want to test in a very limited environment, and I will not say the blessings, but at least within the ages of the regulator, it becomes a real good opportunity for any one of us to be using that. Having said it, when we look at the KYC AML supervision, that's going to gain all the more importance. If you look at the geopolitical world also, like how the sanctions within 8 or 10 days are impacting the commodities, oil, the financial system, and the bigger we are going to grow. See, each one of us who are there, right, might be in the base layer, but I'm very sure going forward, each one of us are looking at becoming from the base to the middle to the upper layer, and maybe the regulator, once we become big one day, to give just like say some of the firms which have grown up in the IT sector in the last 20 to 30 years will be there. And what looks like to be the base layer as of now, given the definition of that 1,000 crores, as well as the some of the sectoral ones, whether they are the account aggregators and the others, over a period of time, I'm very sure once the volume goes up, the risk perception goes up, they will be automatically be moving into the middle, and the middle would be moving to the top, and say and the top layer would also not remain empty. Right now it is empty. I'm sure about that. Having said so, the advantage which we will have is that what the lender is having, what the what the lenders are looking at, what the customer is looking at, and what with the technology platforms which are coming in, we will have to do an integration of all. The earlier we start identifying, and that brings us back to the same question and the observation, a very right observation which Neeraj made, and also which was there as a part of the slides of the presentation. Look at co-lending. 2080 we can do, NBFCs and the banks. Look at the securitization which we can do. Look at the special features which the NBFCs, MFIs can do. Some of them will also graduate into, maybe from the experience we can say, into the small finance banks. Small finance banks might be moving into the universal banks. So the entire environment is that of growth. GDPs could get slightly impacted because of external environments. But as an economy, if we are going to grow, say, at 8%, 7%, 9%, 10%, and then aggregate over the years with the benefit of the demographic advantage which we have, I am very sure, and with the literacy levels going up, the smartphone, the technology revolution happening, it's not necessary for a person to completely understand. And the way the fintech companies are developing the products, cross selling of the products, be it insurance, personal, cattle, kirana store, or the rest, and the advantages which and the opportunities which it provides with that NBFCs are looking at that, whether the part of the operation cost can be borne even by these side fees which can come, and also provides a one-stop solution to the borrowers. I hope I have answered the question. Yeah. So this is where the environment is getting, Shashank, where we have to be the ones who have to grab it. So for that, I will just see we require a 3-tier approach. One is, please don't look at that it is 23, 24, 25. Whenever we look at something very far off and it is not at the top of mind, it loses its significance. We are the losers, no one else is. Number 2, please start identifying what are the areas which we are going to do it. Number 2, please approach the board with the providers who are going to provide the solutions, who are there or who will understand it. Number 3, once we are able to do it, bounce it with the regulator, that this is the way we are looking at bringing in our core banking solution. They may not go in and tell you that you buy it from XYZ or something, but they will certainly say that these are the basic features, generic ones, which through the experience of addressing it and operating and regulating them through the off-site monitoring and on-site monitoring, which the regulator has been doing now for almost 20 years plus. So that is the advantage which we will have. And if there are challenges, we can always go and say that there are the challenges, how do we address them? And if there is a solution which is available, both with the regulator, either as a part of sharing it, or saying that, okay, in this particular area, we could be a bit lenient also for the time being, eventually till the time we are able to come up with a solution which the providers can provide. Also looking at the capex, how much of it is going to cost. So I think once we prepare all these things and we go with a, both as a sector as well as individually, we would be showing the right intent of ours, which will be a very comforting factor that we have started engaging right now. See, the fact is that, let me put it this way, March 31st, 2023, we have to start the reporting. Now look at it, if we start engaging on an individual basis or collectively, even before that in the next 3 to 6 months, and say this is what we have started. This is where we have started getting our approved policies from the board. This is what we are looking at the areas, and you engage with the regulator and you will see the difference coming in.
I think well said, sir. I think you summarized it pretty well. Guys, please go ahead with your question. I just request, I'm just opening the floor for the questions. Take your name, and if you can also call out from which organization you are coming, it gives the context. So please go ahead, anyone who has a question. Also, the host has put up the feedback form. So please fill up the feedback form. What we do also that whosoever the fill up the forms, definitely we will share that deck also with them. So please give us a feedback, and that helps us to keep improving upon it and taking based on your guidance. Meanwhile, please, anybody who has a question, please go ahead with the question. I know it's a pretty complex topic and still is set to evolve, but anybody has any pointers, please share your point of view. Yeah, Neeraj, please go ahead. Neeraj Srivastava.
Yeah. Good evening, everyone, and thank you for the wonderful sessions you guys have put up for us. And I have a couple of queries actually. One of them is related to the I think it is partially clarified, but I just needed a reconfirmation that when we talk about the CFSS, we are not talking about a single system having all the modules and everything, right? It's not like core banking system having everything for all the functionalities for the bank. So I think that was clarified earlier also, that there could be multiple systems which will talk to each other. Another point I wanted to raise is RBI circular talks about the customer interface, right? So customer might be getting a sort of e-banking platform or a mobile app, right? Which banks provide normally. So what sort of features do we look will be available as part of such offerings? I mean, will it be similar to what bank offers? And how do we categorize that?
That's a wider question, but Neeraj, would you like to pick it up? Yeah.
Yeah. So first part of your question, that should CFS be a single platform or a multiple platform? As per my understanding and reading, you can use multiple platform, but as always kind of say to multiple different clients that ensure that it is electronically connected, not kind of wherein you take the data manually from a particular system and input it into another system. That should not be preferred. It should have an electronic connectivity. So either it is kind of transferring the data from an API connectivity or SFTP kind of data transfer mechanism. But the data transfer mechanism from one system to the other should be auto. It should not be manual in nature, because every time there is a manual transaction or a manual kind of a data transfer taking place from A system to B system, I've seen regulators being very unhappy about it, or any kind of government agency not comfortable with it. So that is one thing you need to ensure. So, and second part of your question is that what should be the basis of kind of a customer interaction that you provide into a mobile app or a customer interface? I would say the customers love simplicity today. So first and foremost, it should be very easy to use. Second thing is all that the customer needs to do for his own account should be available onto that particular account. So kind of he should be able to do his KYC onto that platform. He should be able to register onto that platform. He should be able to kind of apply for a loan for his platform. He should be able to see the acceptance of his loan documents or a success of his loan documents. He should be able to interact and see the statements that he is going to provide. So these are the kind of basic functionalities, but everything that a customer needs to do on the platform should be available into a customer facing access. And if it happens through a mobile application, that's the better for the customer, because with today's smartphone density, that's the most used device for a customer to interact. Yeah. So I hope you got the clarity.
Yeah. Thanks, Neeraj.
Thank you. Yeah, thanks, Neeraj. And also a couple of questions very similar in the nature is coming, and I'll request Neeraj sir if you to pick it up. Question coming that how the NBFC is gonna go about in identifying the right solution, because it's like very wide open, the core financial services. How to go about it picking up the right solutions?
So I would say the first and foremost, and I would say how the NBFC should go ahead, I would say how I would think about it is that I would rather see the company has to be agile. Who's going to support me? That is the most important thing. I would rather want to understand what's the support mechanism of that organization, because that is a very clear, important thing. The third thing that I would look into the solution is it should not be having too many things into it. Means like it should not complicate or confuse me as a kind of a buyer, but it should take care of everything that I need in a simple possible format. Fourth, I would say the user interface should be as easy as somebody, and I say I may be running an IT company, but I am very IT unsavvy. So I always say that the user interface should be so comfortable that anybody should be able to use it very easily, and it should be intuitive in nature to understand it. Fourth point, I would say all the regulatory requirements or the reporting requirements has to be as per the RBI guidelines, and it should be compliant to it. And fifth, does it have the capability to integrate with different kind of solutions? So maybe I want to kind of integrate with a LMS or a LOS. Does it have the capacity to integrate, and I should not be forced or kind of required to buy additional licensing for it? So the simplicity of that licensing is critically important for what I would look at into a solution. So these are the primary solutions primary pointers I would like to look into it when I select what particular solution, product, or a platform I would go for it.
Thanks, Dave. Okay, before we go into the next question, again, a sincere request to all of you, please put up the feedback form. My host has put it in the chat box. because that's always gives us a motivation to keep improving upon our webinars and the sessions. Please share your feedback, and also we'll share that deck with you based on that who all have shared the feedback form. Again, so Mukesh, please go ahead with your question.
Yeah, hi. Thanks, Shashank. Thanks a lot to all of you. So I just want to understand from a solution provider, as a solution provider, what are the guidelines for a system? This is there any are there any guidelines by the RBI? This, if I'm saying the system is a core financial service system, so these are the features it should be available in the system. For example, as of now, the NBFCs are maintaining regulatory requirements manually in Excel or in other systems. So are they saying that everything is to be generated from the system itself, no manual work? So what are the criteria that system will come under that category?
Neeraj, you would like to pick it up, or yeah?
Yeah, I can take it up. So the primary requirement is that whatever manual reporting is being done or whatever reporting is being supposed to be given to RBI should be part of the system. That is a prerequisite. Second thing is kind of it should have the modules that is required for this particular pre-reporting. So that is something which is important. And third, good to have is the system should be open enough to be able to connect with other systems for the additional information that it should be coming. Maybe a compliance solution or an accounting solution, which is kind of a core part of the system, would always benefit to the NBFCs that they are kind of using it. So these are a kind of a very high level, I would say at a 30,000 feet level requirements which should be into the system. But there could be methods and processes by which either Digital Fifth or others could really help you to vet your system, that it is kind of up to the requirements what it will be needed into the process. So that is something which a help can be provided onto it.
Thanks. I think
Yeah,
we will have space for a couple of questions. Yeah.
Yeah, thanks, Neeraj. So one more query that some time back there was a circular that audit needs to be maintained in the system for each and everything. So such type of requirement was there. So and can we take this interpretation, because right now a NBFC is using the multiple lending systems for the multiple portfolio. So are we saying that they have to use only one lending system for all portfolio? Can we interpret this in this way or not?
I would say we cannot interpret it in the fashion that they need to have a single system for all different portfolios. But as you kind of mentioned the audit part of it, and I would say because having been involved into the compliance solutions for last 5 years and kind of not only for India, but even overseas, maintaining user access management logs and ensuring that every transaction, so correction of transaction, the change into the transaction, or anything that is being done into the system is being logged into the system for future audits. That is extremely important, because if you kind of log all that information, then only you will be able to provide the necessary audit reports for the regulator in the format that the regulator may be required. So the most important part, because I've seen so many systems where the functionality are amazing and fantastic, but they miss out onto this basic requirements of logging of every possible transaction or event that is happening onto the system. And sometimes the size of the logs becomes 8 to 9 times more than the actual transaction volumes of the system. But it is important that we take care of it very clearly and we log it into a proper way. So that's a kind of a difference between an excellent system and a very good system, that how quality of logging that you are kind of interpreting into it.
Thanks.
Yeah, thanks, Neeraj. Thanks a lot.
Thanks, Mukesh. I think next question from Naresh. Naresh, please go ahead.
Yeah, hi, Shashank, and thanks a lot for this, quite an interactive and knowledgeable session. I am actually working in a credit trading agency, so new to this field. So just wanted to have a glimpse of overall this core financial services solutions or systems that these NBFCs need to put in. So what sort of business opportunities or employment opportunities you foresee on the NBFC side or on the sides where the entities which will provide such solutions to these entities? And the second, if you can take it together, is this time frame which RBI has stipulated, whether that will be sufficient for these NBFCs to comply on this aspect. Yeah, thank you.
Yeah. Aliwal sir,
Yeah. See, as I said earlier also, if we start preparing for it from now onwards, because the countdown has started, see, it has already begun. So if we are doing it from right now, we will find it much easier to do it, number one. Number two, the areas, and this is slightly like I'm transgressing also into and reiterating what Neeraj also said very rightly. What we have to do is look at what is the primary requirement which the RBI is looking at. And to address your specific questions, that what would be the type of the opportunities available, they would be available definitely for the providers who are going to provide the solutions. They would be required also at the NBFC levels, that because you ought to know that, okay, what we are going to provide. And if there are certain gaps, which should not happen, that, okay, I have a core financial solution, but is not taking care of that. So to even have a UT done at the stage before we really start implementing it, prior to that, we should be very, very clear what we are looking at, what we are supposed to look at, what the regulator is looking at us to provide, what our systems are supposed to provide, whether there is a straight-through processing, how much of the interaction has to be non-manual, and that is something which is irrefutable. Once you do a transaction, if there is any change which is doing, there has to be a log which can be looked at, that someone has gone into the system, changed this particular parameter or the value, and if so, what's the reason for that? And if these things can be done, then that will give the comfort both to us as well as to the regulator. Those skill sets would be required, opportunities would be there, specialists would be required, both for the providers as well as for the entities which will be using and will be going in for the system. And also for the rating agencies, please don't, you are a part of it.
Yeah.
Naresh, you are a part of it. Yeah.
Thank you very much, Aliwal sir. I think.
Thank you. Thanks a lot, sir.
Again, I'll request you to please share your feedback. It's very critical for us. And this brings to the end to very great discussions and great input from Uma Shankar and Neeraj from us. So we'll close the session now. But meanwhile, request you all to share your feedback. And thank you very much, Uma Shankar sir and Neeraj sir, for participating and engaging with the participant.
Thank you so much, Shashank. Thanks, sir.
Thanks, Shashank.
Thank you, Shashank.
Thanks a lot.
Samir,
Thanks to everyone.
and all
Thanks
the
a lot.
participants. Yeah, those who have asked questions also, and those who have not asked, but I feel so long as we can act as catalysts for providing it, it's great. Thank you very much.
Great. Thanks a lot.
Special thanks to
all
Mr.
of you.
Samir.
Yeah, thank you. Thank you.
Yeah,
Thank you.
a very nice presentation, Samir.
Thank you.
Okay, stay safe.
Thank you, Samiji. Thank you, Shashank.